Hi, folks. My name is Sujoy Bardhan, and I had been involved in a research with strategy which evolved over years of time with perfection. And I will try and briefly explain as to what is this strategy all about and how I maximize my return on investments based on this strategy. Of course, this is not traditional. It is to do 100% with machine learning intelligence. It's purely mathematical. There are no human emotions involved at all. It's 100% precision based. So the focus has been mainly on breakouts. Breakout means a spike which happens every day, be it bull or bear market. Those who are familiar with stock markets, usually you will notice that there is every day, be it a bull or bear market, they are always top gainers. So the goal here was for this research was to identify which are those stocks which had a maximum spike. If you take a case of NCNA, it took a spike of 41.55% in a day. If someone would have had the intelligence to identify this ahead of time, would have probably made a good chunk of money here. The same with, say, for example, ALBO. In a day, it has taken 11.98% spike. So, this is what the goal was, to identify ahead of time as to where these stocks might take a breakout. And there are so many factors which basically leads to identification of these breakouts. So it took almost 11 years to figure out where these breakouts are happening, and I will demonstrate it in a bit. But this was the main gist of the research. The second thing was that if you really look into traditional investments, people invest for a while, invest on different sectors, spread their money into three or four stocks and leave it there. It could be possible that you are not even making 17% on that stock throughout the year. But if you really look into on the flip side of this research, that if you're able to identify where these breakouts are coming and exit from this stock within a day after making 17% and then waiting for next day's breakouts and reinvesting that money again, obviously your return on investments will be exponential. So the whole goal of this research was to identify the breakouts and also play with the velocity. So as I go deeper into the presentation, you will get to see all of that. But that's what the offering is to my viewers, to be able to be ahead of informations with the breakout. So to start, obviously we will take a look at the quality of stocks we scan to identify the breakouts. The intelligence, the machine learning intelligence has the capability to run in 42 exchanges around the world. But right now I'm only focusing on US stock market. How our predictive model identifies them ahead of time is what you will be seeing as a demonstration. And of course I will take you through the simulations and broker statement, which also proves the same results when it comes to breakouts. But on a ballpark, if you are looking at average, I'm just giving an average. On There are no losses in this strategy, and I will get to this little bit later as to why. But every day your money, the net worth, is growing on an average of 0.10% to 0.17%. So if you take 300 days as a trading day in a year, you are looking at around 30 to 51% return from investments, and you will get to see it in broker statement in a short while. I will try and cover most of the stuff which this research is all about, but Viewers who still have questions can call me. My number is 732 277 5642, and I'll be more than happy to answer those questions for them. So let's get moving into the research, and I'll show you different areas of what work gets done every day. But of course, this is very different from traditional investments because your money is circulating practically every day. You will get to see roughly the investment. If say if you have an investment of $1 million, uh, using this technique, you would be probably rotating it around 60 times in a year. So your investment of 1 million could be equivalent to 60 million times of reinvestment. And every breakout, if you identify, leads you to profit. I don't have to explain why there will not be any exponential returns on investment. So you will get to see this in a minute. Hi, folks. Let me begin with the type of quality of stocks which we scan, just to give you an idea about what type of stocks we look at into for breakouts every day. So there is one process which goes through to identify which are these stocks from the exchange. So I'll pick up one or two of those just to give you an idea about which those are, and so that you get an idea about what type of stocks we are looking at on a day-to-day basis to identify where the breakouts are. So this is a stock from CBS. It comes from a service sector. You would notice that the capital and market capital for this stock is around $23 billion, and you would also notice that the average volume, daily volume, is around 7.64 million. So definitely there is a lot going on in this particular stock as an interest for investors to look at. You would also, let's pick up another one, GIS, and let's plot it here, and let's see where this stock is coming from or which sector it belongs to. This is a consumer good. The market capital is around $33 billion, and the average volume is 3.8, average daily volume is 3.80 million. So there is a lot of movement in this stock too, and I will probably pick up one more. So this is the first area which we look at in identifying, in shortlisting those stocks. So this is another one from service industry where the market capital is over 7 billion, and the average volume of this particular stock is average daily volume is 1.07 million. So that's step one. We have our internal mechanism to identify which are the stocks we would like to look for, and that's the first cut of our research. The second cut is we will probably look for the breakouts. So right now I'll be probably looking at 19th January to identify where these breakouts are expected, and I will scan it. So of course this is purely machine learning, as you would notice that there is no human intervention at all in order to identify where these breakouts are, and that's one of the most important components of this research, where human emotions are not involved at all. So it takes a while to scan, but it's looking into various aspects of the sectors, the stock, and so on and so forth, which happened during January the 19th. So before it qualifies, so it seems like it qualified one stock, which is AEL. So let's take a look at that, and you will see the results of the qualified stocks later on as we go into the broker statement. But this is where it seems like it has got a spike. It's expecting a spike here, and it's also telling me that the spike is expected to come within the 3 days time frame, and if when it comes, it'll last for 4 days. So that's where the breakout information becomes very handy for investing. The next one is AGN. I'll just pick up at random. As I said, it takes almost like 20-30 minutes to go through the entire uh, exchange to scan and qualify the stocks. AGN, I think this is coming in from a healthcare industry, where you would notice that the market capital is 60 billion and the average volume is around 3.47. And this AGN, which we are looking at, is also, this strength is our proprietary information, and it's saying that the breakout is expected to come within a day, and if it comes, it's going to last for 6 days. So this is where the breakout has come, and it's expected that this one will continue rallying. So the idea here is we are not using any human intelligence whatsoever. It's completely machine driven. I'll pick up one more, and the number of stocks it qualifies also depends on the market conditions. If the markets are bear, obviously it qualifies a lot lesser stocks, but if the markets are bull, it qualifies a lot more stock. So as we go as we go deep into this research and strategy, uh, it's not that in traditional investments people probably have no clue that ATU, just for example, is taking a breakout. Uh, and this is the power of machine learning intelligence, where you are identifying, you can call it as finding a needle from a haystack, So this is, again, it has identified a breakout here, and it seems like this is going to take a rally for a while. This was, which stock was this? ATU, which is here. It seems like it already took a rally based on the intelligence, and this is going to continue for roughly around 6 days. So if somebody is investing at this point and continuing to rally for say 3 to 6 days and then exiting out, is definitely going to be profitable. But there are scenarios that if you might be, say for example in traditional investments, if that intelligence is not there and you're investing on a stock which is going on the downhill, obviously it leads to capital blockage. So the idea of this research is to keep rotating the money with breakouts, and so that way your money is constantly at work as you're reinvesting. Typically, I'll do one more. Um, a $1 million investment of AMU, say for example you're looking into asset under management of $1 million. In traditional investment, it'll still be $1 million after a year, but with this technique you'll be reinvesting almost 60 times in a year, which will be equivalent to almost $60 million. So a $1 million asset under management using this technique would be reinvesting for $60 million. So this is another stock which is BCO, and this is where it is. It's expected to take a spike. It has a very decent strength within a day, and it's supposed to rally for 6 days. So that's what's happening here. It took a spike around this range, and now it's expected to continue rallying. So this is the gist of breakouts, and if everything falls based on the machine learning intelligence and you are able to identify everyday potential breakouts to trade, and all these breakouts leads to a success, building up ROI is almost guaranteed, exponential ROI. So that's the main difference between traditional investments where funds are allocated into stocks, ETF, mutual funds, on commodities, and so on and so forth. But in our technique, we are only focused on blue chip stocks, which is taking a breakout every day. And with the help of our order engine, which is a high frequency trading platform, we are also exiting out at a very high speed. So your money is constantly rotating, number one. Every breakout leading to profit, that's number two. And since it's rotating so many times with profits, it's leading to exponential returns from investments. And you will get to see that in a bit. So I hope I could explain here that there is no human intervention. Everything is machine driven. All these stocks which gets qualified by the machine learning intelligence is a potential for a trade. So I'll take this one, CESCBOE, and you will notice that these are all coming from different sectors. They don't belong to one sector. This is taking a breakout within a day, and it's supposed to rally for 6 days. So as you notice that this is coming from a financial sector. Market capital is of almost $15 billion. Their average volume is roughly around 1.03 million, and you would see that this has taken a spike. So this is the beauty of this the machine learning intelligence, that you will never run out of opportunities, and you have lot of options. If I am doing a traditional trading, there is no way I would have known CBOE, which is a stock probably people didn't even hear about, because most of us talk about Amazon. In financial sector, you would be talking about Bank of America, Merrill Lynch, JP Morgan, so and so forth. But how many uh, analysts would be looking into an opportunity for a stock on that particular day, which is called CBOE global market? It's something which we don't do, right? So but with the help of this machine learning intelligence, you are able to find opportunities from the entire exchange with breakout information. It's just like finding a needle from a haystack. So you will get to see as we move on the results of these breakouts, which I will be doing a demonstration on. Here, folks, I will try and explain, which I was talking about the breakouts, as to how they look like when you compile them on a day-to-day basis. This area which I'm trying to talk about is to do with backtesting, and we did all the breakouts, the backtesting for all the breakouts for the year 2017 till June. And if you really look into all the breakouts, which is the concerted one here, but if I take a look at all the breakouts and I remove some of the filters here, just a second, you're looking at for like last 3 months, 3 to 6 months, I mean 6 months of breakouts. I think the machine is a little slow. There's a lot of data. There you go. So if you look at the consolidated ones, which I just spoke about, for 1, 2, 3, 4, 5, 6, around 6 months worth of breakouts. As I said, depends on the market conditions. If the markets are bull, the breakouts will be a lot more than the bear market. But on an average, if you take the breakouts, average breakouts for all these 6 months, you are roughly looking at around 1600 breakouts a day. So this leads us to enormous opportunity, a huge opportunity of identifying the breakouts and trading on them. So I will just take a look at the total number of breakouts which we had for last 6 months. We are looking at almost 16,000 rows here. So it's a lot of breakouts. So the first point which I wanted to explain to my viewers is that even if you take any stock, okay, I'll just demonstrate that to you, e.g. HT, you will notice that this stock has been traded, and I'll see if I can zoom it a little bit. This stock has been traded several times. On April, it got traded once, twice, I would say. Then in May, again, it got traded again, means, and then again in June. In June again, we had 2 times this breakout coming in. Sorry, 3 times, 4 times, 5 times, and 6 times. So what you're looking here is, as and when these breakouts happen, they are all milking profit at a different percentage. So the same stock which took a breakout on May the 26th of May had a spike of almost like 5.15%. So our machine learning intelligence has the capacity to grab that opportunity. Rest of the time it was more or less like 0.70%, but there was once this particular stock had a spike of 5.11%, and the high frequency trading ordering engine, which we have a homegrown product, had the capacity to capture that. So I'll pick up one more. So basically the point here which I'm trying to make to my viewers is that your money is rotating, constantly rotating. If you take the example of DY, I'm just taking an example of DY, you would notice on January it took a breakout of 0.44% and settled within the same day. If you take a look at on February 2nd, 2017, this took a breakout and settled on February 3rd with 11.73% return on investments within a day. So the point which I'm trying to make here is, you are rotating your money. As you identify a breakout, you milk out that profit of 11.73%, and then again you are re-rotating that money. Probably after a few days you are again re-rotating that money on 3/7, and you have exited out with 0.42%. Then again you are re-rotating the money after a few days, and then you have exited at 0.98%, and so on and so forth. So that means you're not letting your money sit idle, especially when this stock is going down the hill. So you're milking out the profit. You're using the intelligence of machine learning intelligence to decide when to milk out, and you'll notice that it is able to also sometimes capture phenomenal returns from investments within a day. So this is the point which is very important for everybody to understand, that money which you are investing is not sitting idle. If you take the example of IT, you see that it has taken breakouts in most of the time in 0 days. Within the same day it has taken a breakout of 0.07%, 0.47%, 0.41%, so on and so forth, and it is exiting out within the same day. That means you are circulating that money within the same day and milking out around 0.5% of profit. So in traditional investment this is not done. So in this technique, investors are not only able to rotate their money, but at the same time they are able to leverage from it. So for example, in this case, this was the time when it identified a breakout. Probably it did not work in favor, and after 38 days it made 0.43%. But what is very important to understand in this technique, as I was mentioning on my introductory slide, that we do not have the concept of any booking any capital losses. Capital loss can only happen under this condition when the stock price of this particular stock would have gone down to zero. So the whole technique is based on velocity. So if you really take the example of 38 days and 29 days is not a good scenario when it comes to velocity. But of course there is no loss, but ideally we should have rotated this money to get this type of a return within 1 or 2 days. So that what leads to a float conditions, which is unrealized profit, which I will explain in a bit. But it is very important to understand that money is rotating constantly. If there are floats for an extended period of time, that does not mean it's a capital loss, because we do not have any concept of stop losses. So here you will notice that most of the trades happened within the same day. There was a trade of the same stock which took a spike within a day. It took a 1% spike and moved on. So that way your money of $4,000 has been is going to be reinvested to some other stock the very next day. So if you effectively try and understand this process, you would look at the monthly consolidations. You would notice that 68% of the money gets rotated within the same day, and over a month's period of time, 26% gets settled within 30 days, and a very small percentage, roughly like 5% or 5.5%, settles over a month. So this is the beauty of this research in terms of how fast you are rotating your investment. Number one. Number two, the point which I was trying to make here, the velocity is 7.41. It's phenomenal. So you will get to see this also in a simulation, that you are, because of this rotation, you are able to reinvest several times, which is not done in any traditional investments. So I hope I could make this point very clear here, that breakouts happen every day, be it a bull market or a bear market, and irrespective of, and everything depends on the machine learning intelligence to decide when to exit out, which you are seeing on the ROI percentages, and that it's able to exit out at 0.5%, or sometimes it's waiting to get 11%. In this case you are noticing it didn't wait too long, because it's not expecting any major spike. Now if you take a look at the success story of these breakouts, if you look at the ROI percentage of like few thousands of trade which we have done, you will notice that only a handful of them are negative, only 2 of them. So let's clear that out and see which are those 2 and why. So you notice that these are the only 2 stocks out of thousands traded where we have lost little bit of a money here. Now the point which I am trying to make is, since we have so many breakouts, we are able to spread the investment equally. That's very important point. It's not like in traditional investments, if I have $60,000 to allocate, I'll probably put in maybe 30,000 for Bank of America, 20,000 for Merrill Lynch, depending on where I give more weightage, and probably only 10,000 for Citibank. In this technique, it's equally distributed, so the risk is mitigated equally throughout. So even if you take the case of a loss which happened because of it got liquidated, this particular stock, you're only losing out roughly around $200. So this is the beauty of mitigating the risk when you have lots of breakouts and you are investing equally across all the sectors. So this is a very important point for the type of risk it takes. Let me do a adjustment here. Give me a minute. I will get to this interactive brokers platform after a while. So that's number one. So out of the thousands we have traded in 6 months, if you really notice the number of line items on your left side, 16,000 rows of record, you have seen thousands of trade here. Only two of them had a loss, which was nothing, which has got nothing to do with machine learning intelligence. It has to do with a company got liquidated. But also at the same time, I would like to also look at something which is very interesting, which you have seen, which I was talking about, where spikes are happening in a massive way, and the intelligence is built in to capture those. So I'm trying to take a couple of them which had a huge spike. So if you really look at these spikes, this is looking at within a very short time, you're looking into a huge amount of spike here, 12% in a day. This was 13% in 37 days. This is 31% in 42 days. This is 11% in one day, 18% in the same day. So this is exactly what the machine learning intelligence capabilities are with our ordering engine, where you will get to see that it has the intelligence to wait and grab the maximum opportunity from the expected spikes which are coming out from breakouts. So having said that, I will try and demonstrate a bit more case studies on the simulation which is going through. It's exactly identical. The reason which I am trying to say, why is it identical? Say for example, if I look at any stock, let me look into this. Is a huge data set, so it takes a while to get all the data for us. Now I wanted to also mention, say for example, I'm just looking at only one stock. The intelligence, the machine learning intelligence is consistent. That's another point which I wanted to make. Say for example, you are as an investor on, you are investing on a stock which is at 43.38. If I am also an investor investing on the same stock through machine learning intelligence, I'll be filling it up almost at the same price. That's what happens in a high frequency trading platform. Everything happens within milliseconds. When I'm exiting out, the price which I'm getting, $48.58, is also going to be almost the same for the next person. Because in high frequency trading platform, it's basically everything gets lined up and it constantly gets filled up based on different algorithms which different banks and institutions use. So you too also get into a line in this strategy, and being high frequency, you also get into the same queue, and then you get filled up. So the difference of return on investment will be marginal for one pipeline versus the other. So that's where the consistency comes in. So the return on investment for Mr. X and Mr. Y on an overall basis will always be the same, almost the same, because it's filling up within milliseconds for the same trade. So that's one of the key important thing about machine learning intelligence, is there's no human emotion. If you take a traditional investment, maybe an analyst who identified a stock is exiting out from, say, this particular stock A, is exiting at $48.58. But another trader or analyst sitting in Goldman Sachs, also trying to exit out on that stock, could be doing completely at a different price. So the consistency is not there. In machine learning intelligence, it's always consistent. So that's one of the most important point which I wanted to make. Here I'll be talking about a simulation which is going on for roughly around $2 million, based on a request from an institution, uh, where one would get to see as to how those breakouts turns out into a return from investments with velocity. So the first point which I wanted to make is this simulation started around December 21st. That's where this trading started, and it's a real-time trading going on with interactive brokers with streaming data. So the first important point to note here is every day, if you look at column P, every day there is profit. So be it a bear market or a bull market, there is a profit. So even if you take the case of December 29th, when S&P was negative 0.5%, the strategy did make around $1,500. One can look into the details of that $1,500 from the broker statement, which is given as a link here. And if you look into the details of the broker statements on the realized part of it, which I am highlighting here, you will see that it has taken different spikes at different prices, and this all adds up to the realized profit of $1,500, 1521. So that's the point I wanted to make, that irrespective of market conditions, bull or bear, this strategy does not lose money. You can take a look at any of it. Scroll down. There are good days also where you are making $4,000 on a bull market condition. And if you take a look at December 12th, the statement provided on December 12th, you would see that you have made around $4,000 there. So again, just to highlight that these are the order engine has the intelligence to identify spikes at a different percentage level, which you have seen also on backtesting. The same results also reflect on real-time tradings. So this is the $4,000 which you have made. So effectively, the point I'm trying to make is, irrespective of bull or bear conditions, there will always be profit. And this is not only for simulation, it is for all the trading accounts which this software is supporting. It's because of precision. So as I have explained earlier, that how precision happens, and it's consistent for all. The second thing which I wanted to highlight is the velocity. If you are looking into this investment of $1.98 million on a period of 19 days, it has generated a velocity of 4.21, means it has reinvested of $8.3 million. So if I take a calculator, you will notice that in 19 days I have made 4.21 rotations. So effectively, in 300 days I would be looking for around 4.21. Around 66 times this fund will be rotating. So if you're looking at around $2 million into 66, means you are trading or reinvesting worth $132 million. So in traditional investments, this does not happen. So this is the very important point which I wanted to present to my viewers, that velocity is one of the most important component of this research, and you have already seen the results of the breakout in backtesting. You can continue watching them on simulation which is going on my website WGS Investment Club. If you go under performance, you would notice that this simulation has started from 21st December, and there's a link provided to it which will take you to the same place. So you can, even if you're watching at a later date, you can come back and take a look at realized profits, whether these realized profits are profitable every day. That's one thing. The velocity is the other piece which you can take a look at. The third important thing is, since, as I have explained earlier, that we are almost rotating around 65% of the investment every day, you'll never run out of cash balance. You'll always have cash balance reflecting here. So it started with 1.98 million, but every day it has funds available to rotate because of the velocity. So having said that, as per our best practices, there is no need for us to have the profits which is accumulating from the realized gain every day here, which is basically reflecting here as a cumulative total. For that, it's strongly recommended that investors move this fund into a bank account, so that way you are guaranteed with the return on investments. You are maintaining a net worth around 90 to 95% range. This is completely at the discretion of the investor. More allow tolerance you give to the net worth of course it will not go more than 100, but if you allow say up to 95%, you will be continuing to invest more. But if you are maintaining it at 98%, of course, as soon as it reaches this threshold, the algorithm will not recommend any stocks for you for the next day till it comes back to 98%. So the point here I'm making is, you're definitely every day you're growing your wealth, but at the same time, you are, as an investor, you are deciding how much you want to allow as a tolerance for the float, which I was talking about earlier. So if you take a look at this strategy more in details, you will understand the concept of how these breakouts, which is coming in from daily reports, which is reflecting here, be it on bear or bull conditions, the number of breakouts vary. Based on that, you are investing, and at the same time you are making profits. Another important thing to note is, although you are planning for $823,000 investment on this particular day, which is 12th of January, of $823,000, but the next following day you might be only investing $594, because the order engine has the capacity and the inbuilt intelligence to stop investors from investing if it sees a risk element in the market. So this is fully machine driven. Everything is machine learning intelligence, and I will explain a little bit more about how this is happening with our order engine as I proceed. Here, one more thing I would like to highlight to my viewers. One of the components which you have seen is the velocity, and the second component which you would be noticing is the return on investments which you are making every day. And this is coming in from the realized profit, which I have explained earlier, that every day there is a profit, and this is the reflection of the accumulated total of the profits, which is happening in this case. Right now we are looking at around 2.26% in 19 days. So if I take a calculator, you are looking at 2.26% in 19 days, which is around 0.11% on a daily basis. So this is inconsistent with what I have shown on the introductory slide, that all the investors, who is using the software, are ranging between 0.10% to 0.17%, and that depends on the market conditions. But this is where, if you take this as an example, you're looking at 300 days in a year for trading. Even if you assume that, you're looking at 35%. If you're talking about 3 years running this strategy, you're already doubling your investment in 3 years, which is at 107%. And you're maintaining your net worth. Say, for example, as I say, that this is completely at the discretion of the investor. If you are maintaining at around 95%, then after 3 years, you are basically just taking out that 5% away, and you are walking out with 102% profit after you liquidate your stocks. So of course, it will just to let my viewers know that in traditional investments, this is the net worth is over 100% because the profits are not taken out. But in this technique, the net worth is maintained in between 100 to 95% or 100 to 97%, whatever is the tolerance level provided by the investor. And these are all configured in the software. And the milking technique, and this is our ordering engine. I will try and show you our ordering engine. This gets configured with every individual account. This is our order engine, where all the configurations are set up based on the preconditions of what time the trade has to go in, the profits, the document which is being shared for with the dedicated to the investor for the return. Say, for example, the investment which is going on for this particular simulation, all the recommendations and the breakouts get published here, and the order engine sucks it over from here. So this is a document which is shared with the investor along with the realized profits. So investor, of course, has the right to go and change it, but it would be completely at their own risk, because the algorithm is calculating exactly how many shares it needs to give and what type of risk under those risk factors. And if the investor goes and changes it from 118 to 318, of course, it's the risk of the investor. It is beyond machine learning capabilities and intelligence. So this is one very important point which I wanted to maintain. I wanted to let my viewers know that everything is machine driven. We don't touch anything, but at the same time, we do not hold financially advisory role, because we are not planning on your AUM as such. All you are doing is you are giving a dedicated amount to this strategy, whatever that amount is, 2 million, 3 million, 5 million, and with our intelligence and research and breakouts, we are multiplying it as many times as possible depending on the market conditions and the tolerance level you assign. And you have already seen in the order engine there are certain parameters which gets configured into investor's account. So everything settles down. The order engine fits into Interactive Broker's configuration model, and every configuration for every investor is different. So this is completely a software driven approach, where the investor decides what type of tolerance the investor would allow, and what the other parameters in terms of the order engine of how the strategy is to be deployed. So everything is decided by the investor. It is 100% transparent, and we do not share, or we do not play any role of a financial advisor here. We are purely a software service provider, where the software is running behind this platform of Interactive Broker, and it is transparent. We also have the capabilities of getting all the events which is happening, whether it's investing or whether it is milking out profits. It goes to an email which can be routed to the investor directly. So every movements which is happening within the portfolio, within the interactive brokers platform, is also reflecting in the form of an email. So an investor does not need to literally sit and observe. He can have that information coming to him in terms of which are the stocks which have settled, because settlements happen throughout the day. And just to give you an example, if you take a look at the settlements which is happening, hold on, let me go to account management, just to give you an idea. If I'm looking into these settlements as to when it is happening, it happens throughout the day. Just a second, I'll run a statement just to show my viewers that how these settlements are happening. So it will give you a trade log, and if you see the trades here, you'll notice that there are a lot of settlements which is happening throughout the day. So the investments which happened in the positions which got closed from previous day at 9:37. So throughout the day there is always movements on stocks, and this is settling. So as I have said, that most of it are profitable. You will not see too many reds, but just to give you an idea that the entire movement of buy and sell is happening throughout the day, but the buying part of it happens during a certain time, uh, 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 and we will discuss this in details when the investor is ready for investment. But you can configure that as to what time you want to enter the market and under what conditions. So the algorithm would have the intelligence to stop your investments if the market conditions are not favorable. So it does all the last minute due diligence which a human being cannot do it, and therefore the effective results, as you have seen, is very profitable. So having said that, I think I have covered most of the points, but in case if anybody if I have missed out on anything, please feel free to get in touch with me, and on my website WGS Investment Club you will get my contact information. So I would look forward to any questions, but this is a great strategy. A lot of people are already enjoying it. I invite institutions, high net worth individuals, financial advisors to allocate a small portion of their AUM and see how many times you can multiply it with phenomenal returns from investment.